All right, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to On the Radar. We're going to take a look at the market updates and take a look and see if we have any stocks that may be setting up to do something through the rest of the week. Today was a mixed market, and let's jump into today's session. There he is. As you can tell, I've still got a long sleeve sweater on, so it's still a little bit chilly over here in Hawaii. I know I'm not going to get any sympathy from the guys who live where it's really cold, but it did get down to like 53 degrees up where we lived last night, and I was cold. Anyway, so let's take a look at what's going on with the markets. As I said, the Dow was up. Well, the other three, my tracking indexes were down. What's going on with the S&P? S&P crept up a little bit higher today towards its upper channel line. It's been working in this channel. It's actually two different channels. One lower one goes down all the way down to this trend line. The other one is kind of running up this trend line here where it broke below it, but then it came back up into it to retest it. The one thing that I want you to pay attention to is, let me draw on my screen here. The one thing I want you to that I'll be paying attention to is one, negative divergence on a daily chart, lower volume on the move up. However, a spike in volume today, which could be indicative of sellers starting to come in. At the same time, bear in mind, with the cross current that's kind of going on here, all the moving averages are stacked in the bullish direction. And so until we get price actions that starts breaking down through them and closing below and staying below them, we can anticipate the indexes to, at least the S&P and the other two indexes that I track, to continue moving up. So what do? We continue to trade the pullbacks until the pullbacks stop working. The Qs, similar type picture of today. Not quite a hanging man type situation, but we do almost have a bearish engulfing of yesterday's candle and the day before's candle. Not quite, but it is very clear that this is, this particular candlestick is a bearish candlestick in that we opened high, closed low, in the middle of it. It would have been more meaningful if it would have closed closer in the lower half of the wick. It did not do that. And so it's kind of like, I would almost weight it like it's a doji type of situation, which is just a mark of indecision. Again, the negative divergence going on here. It came right down, and it was wide range today, so this was an outside day of the last few days, and oftentimes outside days after a move up is basically a reversal preparation move. And so where did we go? We pulled all the way down to the 8, bounced back up, tested the breakout, bounced back up, and so we ended up high, not higher for the day, a little bit, down for the day, but still moving averages stacked to the upside, and so no total reversal signal now. Now I will, one thing I wanted to show you on this is, isn't it interesting how price action yesterday came right up to the 1272, stopped just short of it. Today we actually hit the 1272. Matter of fact, this morning the 1272 is at 335.09. Today's open was at 334.99. So we were 10 cents away from that 1272. Tell me people aren't watching the Fibonacci's. So is there anything for us to do on on the Qs right now? No, not quite yet. IWM does give us a, come back, give us a bearish engulfing pattern of yesterday's candlestick. So that counts as a bearish reversal signal. Didn't quite make the full 200% extension of this move breakout here up to this level. What else is going on that we need to be aware of? While it has not rolled over totally, TSI is looking like it wants to roll over, but we don't want to over anticipate. And we've got a little bit of, I don't think that's a, let me grab that. Let me just grab that. There we go. From here to here. Yeah, slightly negative divergence there. If I roll over to the weekly chart, yeah, clear we've got some divergence there. How I want to play this through the rest of the week is, again, we are super extended away from the 20-day moving average, so anticipating a reversion back to the mean. I think that they will basically cross, maybe a pullback would cross about where the moving average comes up through the 218 level. And that would be a good convergence of where we can anticipate a potential bounce from that area. Again, on the selling today, the volume did tick up. A couple of things I want to highlight to folks just really quick is, one, if you're ever questioning, if you are guilty of over anticipating, let's say you use stochastics, so let's say you follow us and you utilize the TSI. Oftentimes, as the indicator gets up to where it should be reversing, we will over anticipate and get into a trade before it's time. We want to basically be waiting for, one, the momentum to actually shift. At this particular time, the momentum is starting to move. However, until we get a crossover and on those momentum indicators, we don't really have a momentum shift. And so if you catch yourself wondering, why the heck am I always getting stopped out when I get into a trade, it may be because you're over anticipating the move. In other words, you're right in your analysis, but you're early in your expectations. And so that's kind of the tip for today. And I'll follow that on with, if the moving average, you pay attention to the 3 S's on the moving averages, especially if you're a multiple moving average trader. And I trade the 8, the 20, the 34, and the 50 down here. 200's way down here. Occasionally I'll take a look at that. But those are the primary primary moving averages that I pay attention to. So we want to pay attention to the 3 S's: the slope, the stack, and the spread. Each one gives us a little bit of different information if you've never heard this before. The slope, if the trajectory is moving up very rapidly, that is an example of an acceleration of the price action of the move. So we can anticipate things to continue to move along that line. And again, the steeper it gets, though, that's where we want to start being aware that it could, in fact, reverse and fall back down. Secondly, the stack. If the 8 is above the 20, which is above the 34, which is above the 50, we have a bullish stack. When we have a bullish stack with no crossovers, it's a good thing to let your bias for a trade be in the bullish direction, because that's what it's called. It's called a bullish stack. And then related to the slope and the steepness of the slope is also then the spread. When the moving averages start to spread apart, as we see here with IWM, the distance between the moving averages is starting to grow. And if it looks like it is, out of, over, greater than just the average of the move, just watch for the, for the potential that we could be setting up for a pullback at that time. Where's it going to pull back to? Typically to a lower moving averages. And the other thing with moving averages is once you break through one, it increases the probability that you will test the other. So in other words, once we break through the 8, it increased the probability and the likelihood that we're going to come down to the 20. So what does that tell us? That's a great place to lay in targets for your potential trades, if that's what you're looking at, or targets for this is where I want to trigger into a trade. Broke the 20 here, didn't quite get down to the 34 and reversed, so that's a good sign. So one of the other things, and so that kind of gives it to us on the indexes. I want to take a look at two different stocks. One, Jeff left us a message yesterday, and remember, when I post up the On the Radar, when I post that up to YouTube, I will be there normally for the premiere, and we'll go through the premiere. And if you have questions you want to ask, or if you want to feed me, basically say, hey, here's a stock I want you to look at tomorrow, that's awesome, that's great, and we'll do that, and so that's really good. So Jeff gave us a stock to look at for today, and that stock is MERC, which stands for MERC. So what I do, and we want to see is, does MERC meet the criteria to go on the radar that I would make it onto my watch list? That's what I'm going to provide. So one of the places I start with is the Investor Business Daily, and it's called there we go. Get the stock checkup list. And as you can see here, I put in Apple a little bit early. You can see Apple's #1 in their industry group, and that's where I want to know where things rank. And so I initially go to MERK, say get it. Go get the. There we go. So as you see by the frowny little guy there, that MERC has a really crappy, excuse me, but it is a really crappy composite rating, which means it's weak. What else are some of the things that I want to see about MERC? Out of it, in its industry group, it ranks number 10. It ranks number 10. How many are in, and so, and what is this? Develop prescription drugs in the areas of diabetes, obesity, respiratory, and it tells me what that's about. And I go down a little bit further. What else can I find out about this? Well, out of 197 industry groups, the group that MERC is in is ranked, is basically 159th. So that's in the lower 20% of all the industry groups. So, so while I maybe wanted to take a look at MERC, or maybe I have shares in MERC that I inherited, or it was a profit sharing type thing, but I want to be aware of, if I'm buying MERC for the first time, there's probably better places to put my money. So, however, that reminds me, tomorrow on the session, I'm going to be walking through what happens if somehow you wound up with a few thousand shares of a stock like MERC, or like, let's say, Wells Fargo, a few thousand shares, and you're sitting there and it has sentimental value. You'd like to hold on to it, but at the same time, it's just sitting there. It's lingering. It's kind of wasting away. It's been all over the chart. How can you enjoy the dividend that's coming on it, but how can you roll that around to figure out how to generate additional income off of something like Wells Fargo? I'm going to share that with you in the trading tip tomorrow, so tune in. So once I have I know what kind of fundamentals the entity has, I then go back and I take a look at the chart itself. And with MERC, as we see, what can we learn from MERC? Well, as you see, it's at a it's in a downtrend. One thing about MERC, and I want to know how far it's actually fallen. So since the first of the year, it has fallen from here to here. So how far is that? That is about 12%. So that tells me MERC doesn't, even though it looks very dramatic, it doesn't basically drop a lot, because it's probably a pretty stable price-wise type of entity. But then I want to bounce this out a little bit. Well, where is it at right now? And as you see, it's approaching a level of past resistance. And so I'm going to roll out to the weekly chart. Now it can go lower. It can go down here, you know, and I can blow this out just a little bit. And if I'm really doing a really good analysis of it, I will go and I will get all the way out to the monthly charts to say, okay, hey, where has it been? Where is it going? So at this particular time with MERC, yeah, I mean, down here at $65, and I will venture to guess that the move from here down to here is probably from this high to this low is probably equivalent to the move down to that level there. And if you want to know how to figure that out, it's very simple. It's basically, there's the approximation. I just do a reverse on my fib. If you've never done this before, I go to this low, and I'm going to take the body here because that's more important. So I'm going to go from this, or I can actually go from this low over here, that low there, up to this high. And that projected out actually takes me down to about 61.94 right here. And that's another way you can do your projection down to the downside. And a move down into this range here, $66, $67 would be at that Fibonacci level. The other thing I can do is just grab, let me remove that drawing. And one of the other things I can do is just, if I want to get another projection on this, I can just take it from here to here. And again, gives me a similar type projection down to the downside. So MERC, it has, it has, tradable patterns. And so, Jeff, as far as I can see, it depends on what you're doing. If you already have the stock, I would learn how to trade some, figure out some way to generate some additional income on it. You get 65 cents per quarter worth of revenue. Its move, let's see, take a look at how big its move is. About 14%. So, if you're just looking for something to be tried sideways and that kind of stuff, you may take, trade it 10% up, 10% down. That's what I'd be looking at. Last but not least, let's jump over to another one that is marked for the downside, and that is VRTX. And VRTX has been a favorite of a lot of different entities. However, after its last earnings report, last couple of earnings report, it basically fell out of bed with this earnings report back in July, came up, then broke down hard, did a classic move back up into the moving average, and now is falling again. And this is a weekly chart. If I go up over to the daily chart, what am I looking at? I'm looking at more or less a flag to the downside. In other words, in what does the flag look like? And I'll just give you an idea. I would basically take it from here to here. If it breaks that, and basically now we're moving sideways. If it breaks below this area, how far would it likely go? It would probably go approximately, if this is the halfway mark, approximately the same amount as that move there. Again, I can sit there and I can back into this by figuring out, okay, where am I likely to go? And I can grab that. I can either grab it here and measure the Fibonacci backwards, and that's fine. And it'll give me my projection down to the downside. And I'll just pull it up here. Pow. And now let's take a look. Let's run over to the weekly chart and see where that comes out at. And as you can see, it basically pulls us down to this level here. If that is broken there, that gives us a trajectory down to about 179 and 178.99. Let's see if that lines up with anything. Yep, it sure does. See this past support resistance over here, consolidation. It lines up almost right square dab in the middle of it. So it gets you down into a zone where you had a breakout from before. So that's a zone of support. So that's one way to skin this cat. Another way, and I'll just give this to you really quick, another way to skin this cat would be basically, let's take that out, remove. And so another way to skin this cat is just basically to take this move here from this high to this low, back up to this high, and then that gives me a new trajectory to the downside. And as you can see now, it's okay to take a couple of fibs on there. As you can see, then that 100% of this move down, the symmetry with that move right there. Okay, symmetry with the move from there to there takes us down. If we continue to move down along that same trajectory, takes us down to about the 164 level. So what am I looking for? I'm looking for any kind of a pullback into the moving averages and or a break below this low right here, which is down at 210.99. So I'll be looking for a setup for a spread trade on VRTX to the downside, and we may make that a spread trade that lasts about 2, 3, 4 weeks. May have some possibilities of a bear call spread or a call credit spread. So anyway, that's all I've got today, guys. I hope you found this helpful. If it does, give us a thumbs up. Share this information with as many people as you can. If you're watching it on YouTube, please subscribe to the YouTube channel and hit the bell for you'll be notified when we do upload new content to that area. And remember, we just launched our new autopilot trading system, and I want to thank you guys for going over and taking a look at the video training session we did on Saturday. And you'll find a link to that down in the description on the YouTube channel and on choice number 1 on Linktree on Instagram. So aloha, God bless everybody.